back tested and live data on at this current point, and it's simply just how I view the market and how I trade it on a day-to-day basis. So yeah, it's going to be a good call, I can tell you that. And yeah, let's get straight into sessions. All right, so the first thing we're going to get into is talking about the Asia session range. We're just going to go through all the sessions and start with Asia. So there's quite a lot of important characteristics to talk about with the Asia session range. One of them being the sort of high levels of liquidity that the range sort of includes, both obviously the high and the low, and how we can sort of trade them and use them, typically in London session, but also throughout the day, and how they can set a sort of direction for the day. There's also another sort of characteristic to the Asia range, which we can use to sort of determine the day's direction. So that's the first thing we're going to jump into. So let's hop on the chart now and take a look at it. So on my chart here, this grey range here is the Asia range. So what we're going to be paying attention to first is the direction in which the range closes. So by that, I mean, for example, the Asia range here opens at this particular price level and the session closes here. So in other words, you could describe the Asia range as closing bullish. So it closed at a higher price than what it opened. So what does this actually mean in terms of, the bias or what can happen for the day? So essentially, when the Asia range closes bullish, this could be quite a good indication that the day's price action is going to close bullish, or in other words, the daily candle is going to close bullish. So for example, in this particular day, so the Asia range closes bullish, and as a result, the day closes bullish up here. So typically, say if the day is expected to close bullish, we may see price trade down to take liquidity. So for example, in this particular day, price looks like it came down to harvest liquidity below Asia low. And once it's taken this liquidity, it's then able to establish its daily direction and close where it wants to, in this scenario, bullish. So yeah, so a bullish Asia range can result in a bullish day, and obviously it goes the same for bearish. So a bearish day of a bearish Asia range can result in a bearish day. It's a very strong confluence, and the most important thing to sort of be aware of is, if we are expecting a bullish day, the range closes bullish, you can expect price to particularly sell off maybe during London session to come and take liquidity out, and then we can sort of establish and confirm that daily direction, which you can see what exactly happens here. The Asia high and Frankfurt high, which is this little pink box, but we'll get on to talking about that soon. You can see that the Asia high was used and taken as liquidity. The liquidity that rested above this high was transferred within here. You can see the mitigation or money transfer, which is another concept we're going to talk about. And we've also built up lots of liquidity. Money gets transferred here for the second time, and this fuels our move down to come and harvest liquidity, which rests all below this sort of Asia range and these Asia lows here, particularly the low of the whole range itself. You can see price aggressively. Aggression is another key characteristic we're going to take a look at throughout this session. It's a very sort of key characteristic of the algorithm, something definitely very important to pay attention to. So you can see the algo kicks in, injects a lot of capital into this move down with the purpose to grab this liquidity here. And once this liquidity has been grabbed, money gets transferred in here from weak to strong hands. And then price injects back up with the liquidity that was taken here and establishes the day's direction. So that's a very nice example. We can just follow price along. So this example here, the range opens here and it closes here. So once again, we've had a bullish day. Price takes liquidity. So above these two equal highs, which had been engineered the previous day. So there's a generous amount of buy side liquidity here, as well as the Frankfurt range high, which gets taken. Price then sells off within this area here, comes down to grab liquidity. So we can see that price has taken out this internal range of liquidity and looks like it's came to mitigate a level down here. And now once liquidity has been taken and price is sort of happy to accumulate and then inject orders back into the market. We can then close off with a bullish day, which is very nice, a bullish direction for the day. So the next day, the price opens here and we close. We open here and we close here. So you can see we've had this slight bearish trend within the Asia range. So the same as a bullish example, however, just the opposite way around. So we can expect a bearish day, which we can see price eventually in New York pushes down, and we can close the sort of main key trading hours for the day bearish. We can see that, you know, early on in the day, London session, price injects capital at London, which, you know, we'll talk about London too being a sort of key kill zone for the algorithm. So London session injects a lot of orders into the market, mainly to take out this liquidity, which we can see resting all in here. We also come to mitigate a key level up here, which we're going to get talking on to sort of liquidity and mitigations, all this sort of stuff later on throughout the session. So price early on takes liquidity for the day, and then this gets used to fuel the move down, which establishes the bearish direction for the day. You know, you could expect entries within here because you have a bearish sort of bias for the day. You know, we can see we've got a lot of resting liquidity existing underneath these lows, and you know, we know that when the market sort of, from what I explained earlier, talking about the algorithm likes to build liquidity on both sides of the market. So, you know, buy side liquidity and sell side liquidity, one side gets taken, and then you can trade down to the next side, target this. This is a good example here. And then sort of following on after building up more liquidity, and maybe potentially want to come to target different levels, there could be potential sell opportunities inside of here, taking out liquidity, resting within here, mitigating levels, and coming down to raise further liquidity. So looks like sort of similar scenario again with the bullish example. So the range opens here and it closes up here. So we've had a bullish correlation for the Asia range. In this example, Asia low liquidity gets taken, Asia high liquidity gets taken. Looks like we also took out this previous high. This high is a very significant liquidity high, mainly because of its aggressive characteristics, a nice aggressive in, aggressive out. Usually with this large wick is, you know, it's going to store a large amount of orders, hence the aggression, which sort of signifies the large amount of capital used to inject the market into this level. So this is also another key level for this sort of algorithm to take, and then this gives a nice reaction to come down, take more liquidity out, and push the day bullish. We're gonna get back into it. So where I was at, I was talking about this Asia range here. So yeah, we had a bullish session, took liquidity on both Asia high, Asia low, and as a result, the day ended bullish. Looks like price wanted to take out a higher time frame liquidity level. So in this instant, sort of the daily sort of direction and target looks to be to take out this 4-hour high. So, you know, the higher time frame appears to be satisfied with taking this 4-hour high to continue bearish. So once this liquidity has been taken, we may expect price to sort of want to be bearish from here onwards. You know, we know that there's a lot of liquidity resting here, typically because, you know, this aggressive move is going to have lots of sort of capital which has been injected into this. Going to be lots of resting orders, and you can see from the previous day that this low never got violated. So all this liquidity is still existing underneath this level. Lots of transactions, and this is also a very high incentive, like sort of buy level for a lot of traders, especially retail traders. But, you know, from our sort of high time frame analysis, you know, we could have perhaps expected sells from high time frame liquidity points. We can see price very aggressively rejected out of here. So, you know, perhaps this could become a potential sell zone off a breaker block. But, you know, we're going to get talking about all that stuff later. But if we were to expect sells, you know, the easiest sign, the first sign of the day is the direction which the Asia range closed. So in this particular example, the Asia range opens here and it closes here. So you can see, you know, we've had a bearish correlation once again. Price trades back up at Asia close, takes out liquidity, and then we continue bearish. And then from there, price sort of reprices into a more fair price level, allows sort of more traders to get involved, and then continues down again. So, you know, you can see how sort of the Asia range can be used in quite a lot of senses, you know, to take trades sort of after a take of liquidity. The Asia session, you know, it's a very high liquidity session, and London session usually sort of likes to use Asia liquidity to sort of establish its direction. We're going to get on to talking about London session coming up very soon, but since London and New York require quite a lot of liquidity to move, Asia session is sort of usually quite an easy liquidity point to sort of raid. Asia session high and low also sort of contain lots and lots of liquidity because there's very large stock exchanges being traded in these time periods. You got Tokyo Stock Exchange, for example, sort of trading lots and lots of money, billions, trillions of dollars. So we've got a couple important things to take away from this. So the main ones are a bearish range equals a bearish day, bullish Asia range equals a bullish day, and Asia high and low are important liquidity levels. So there's also one more sort of important thing to talk about Asia, and that's the key sort of settlement time, and what is the real sort of Asia range timing. So we're going to talk about this now. So this is specific to the CLS algorithm, or settlement time algorithm. So the sort of key Asia range timings which I use, this is in GMT, which is UK time. So if you're from a different time zone, you're going to have to sort of change this to your time zone. But key Asia range timing, so what I use is 11 p.m. till 5:30 a.m. That's in UK time. So yeah, just translate this to your time, but 11 p.m. till 5:30 a.m. is going to be the most accurate sort of Asia range timing you can use. It's very important to get this accurate just for the sort of high and lows and the direction. Sometimes it can be quite fiddly, so yeah, it's important to get this correct. So this is the sort of correct timing you want to be using, so I'd advise you to sort of start using this on your charts. Yeah, that's sort of all we've got to cover about the Asia range. We also got to touch on some other sort of little liquidity points here, and some other sort of basic concepts which we're going to dive a lot deeper into. So next we're going to sort of move on to the Frankfurt session, and then from there London session and New York, and then we're just going to wrap up the sessions, talk about the trap timings, and then we can get onto some proper sort of technical price action analysis, liquidity, entries, confirmations, all sorts of things, gathering a bias, everything sort of important to our traders. So yeah, let's move on to the next part. So let's get on to Frankfurt Open and the Frankfurt session range, and sort of how we can use that in our trading too. So the Frankfurt session is just after Asia and also just before London. So for those of you who trade London or even New York throughout the day, the Frankfurt session can be extremely useful. There's quite a lot of sort of features to the Frankfurt range and Frankfurt opening price which gets used in my trading, which I'm going to go through all of it now. But to start off with, we're just going to go through the actual specific timing. So this is obviously in GMT, which is UK time. So Frankfurt session range is 6 a.m. till 7 a.m. GMT. So yeah, you're just gonna have to convert this to your time zone depending on where you're from. But on my chart at the moment, this purple range here, which is, you can see 6 till 7, this purple range here represents the Frankfurt range, and obviously the grey represents Asia. So Asia, so Frankfurt liquidity is usually used pre-London session. So it's another type of liquidity that London may want to use as sort of fuel to sort of create, maybe the protected daily high, daily low of the day, sort of to start off the day's price action and create them London moves. So there's quite a few characteristics that we're going to go over with Frankfurt. But first of all, the easiest one that we're going to cover is Frankfurt high and low being sort of used as liquidity. So say pre-London session or at London Open, usually to fuel the London move. Frankfurt as well as Asia, which we covered earlier, can be used as liquidity. So for example, say in this particular price action here, let me just pull this over. So we've had a higher time frame draw on liquidity. So this is like a 1 hour, 4 hour draw on liquidity, and dropping to the lower time frame. you can see, prior to this drawn liquidity, we've had a nice market maker model. So this is essentially just a range of price action, and then one side gets liquidated. So, we can see we've had this sort of pattern. Prices liquidated one side, left behind all this liquidity up here. So we could expect buyers to take out all this liquidity. And this paired with the fact we've just taken out higher time frame liquidity, signifying that we may see a money transfer and then a shift away as a result of this grab of liquidity. So, it's definitely a sort of high probability area. Take into account higher time frame bias with it too. I'm not going to go into that yet, but take into account things like that. You could get a good bias to take longs around this area. In this case, potentially targeting this imbalance here with liquidity here to be taken out, and then to continue shorting the market downwards. You can see the market's left liquidity, so shorts would make sense. But so yeah, dropping, not to get too far ahead, dropping back down to the lower time frame here, you can see that as price took liquidity here, we had this nice aggressive move down, this nice aggressive push here. Also what we know as a vector candle, which we're going to speak about a bit later on too. And since this this low was put in, we can see prices shifted since then. We can see the momentum start to kick in, back bullish again. The significant thing to note here is, price doesn't actually take out any sort of important liquidity. So, hence a pullback from this area back into, this sort of back into this price leg here. So any type of pullback into here, could make sense to buy. As you can see, we've still left liquidity. However, the market's shown its attention by, giving a break structure and, nice bullish momentum to the top side. We've got lots of liquidity, Asia high equals highs, and plus, expecting a reaction off this higher time frame level. So, it's definitely still sort of valid and makes sense to take buys from this area. So as you were sort of potentially looking to take a buy as price starts to pull back, we can sort of hop on the higher time frame. Well, we can see here that we have this nice protected algo candle, which we're going to talk about. We're going to sort of dive back into this stuff later on a lot deeper. But the important thing which we're talking about currently is the Frankfurt range. So we can see how the Frankfurt low in this case is going to be used as very nice sort of liquidity or inducement in this case. Another thing we're going to talk about later. But, the important thing to note here is that as London session opens, so the London session opens at 8 a.m. GMT for me. So we're going to get into London a bit later. So this is just the London open range, or essentially the first hour of the London session. We can see London pretty early on uses the Frankfurt range as liquidity, comes down to mitigate a level. And from here, you could see a potential buy opportunity, which we can see price to continue on pushing to the top side and eventually delivering to liquidity levels. We can see we have sort of a short reaction off of this liquidity level, and then price continues and eventually to target sort of a higher time frame or potentially your target. So this is quite a good example of when Frankfurt has been used as liquidity. It's a very strong confluence. So say if you was unaware, if this wasn't Frankfurt, then the fact that these lows here contain Frankfurt liquidity just sort of strengthens that liquidity zone. We've also got other confluences such as price leaving behind trap zones off of this sort of supply zone here, but we're going to talk about all this juicy stuff later, so get into what defines that sort of trap. But yeah, essentially the main thing to sort of take from this is Frankfurt high and low being used as sort of quite important liquidity levels for the trading day. You can see this beautiful algo structure here where Frankfurt high gets taken out and absolutely melts from there, etc. But there's another sort of important detail to get into when it comes to the Frankfurt range. So since Frankfurt and Asia are pretty close to each other, the Frankfurt range is sort of straight after the Asia session. One thing to note is if the Frankfurt range takes out the Asia high, so say we have the Asia range here. This is our Asia range. This is our Asia range. So then Frankfurt session opens and Frankfurt session takes out Asia high. So this here is the Frankfurt high. Usually what happens when the Frankfurt session takes liquidity, it usually doesn't hold. It can be a very weak grab. So say this happens here and then Frankfurt closes here, then price can come to take Frankfurt high. So it may look like Asia high has been taken and then the high which took Asia high has been taken again. But however, since this is Frankfurt high which took Asia, there's a lot of liquidity still resting above here, and it typically doesn't hold because London session is when the real sort of injection comes into the market, and hence will take sort of Frankfurt session out. So we're just going to hop into some chart examples to find this, find a few examples of this. So for example, just go here. So you can see how the Frankfurt range takes out Asia low. It tries to hold, and as a response, it fails. Frankfurt low is weak. Literally the same exact thing here. Frankfurt takes Asia liquidity, fails, and it's weak. And here again, so Frankfurt range takes out Asia high up here. We put in this high here, which is Frankfurt high. We start shifting off of Asia, trade back into it, and it fails. So, a sort of important thing to note is that Frankfurt session grab of liquidity is weak, especially, usually when it takes Asia high, especially Asia high. So this can obviously sort of help you from getting liquidated from quite a few moves, sort of prematurely getting into sells or buys off of maybe Asia liquidity. If we see that Frankfurt sweep, we can expect potentially another sweep after this and then continue down from there. And your sells could be up here and along, continuing your potentially bearish buys for the day. And obviously, like we were talking about when we talk about the Asia range, you could gather this bias from, if the Asia range closes bearish, then expecting a bearish day. So if you're expecting a bearish day, then you'd expect Asia high to be taken so that it can be used as fuel to continue down. So yeah, that's cool. There's a good bit of sort of detail on Frankfurt session there. We've still got a couple more things to cover. We're going to hop back down into this example. This is quite nice. So another sort of important thing to pay attention to is the Frankfurt opening price. So, what is the Frankfurt opening price? It's literally the price level at which the Frankfurt range opened. So, for example, let's have a look here. So the range opens at 6 a.m. We've got this bearish candle here. So we open here and we close here. So you can see the Frankfurt range opened at this exact price level here. So let's just mark this up as the Frankfurt opening price. So, what use is the Frankfurt opening price actually to us? So let's have a look, shall we? Let's draw it across. So this is the Frankfurt opening price. Well, the Frankfurt opening price can be used to sort of help determine which levels may become a trap. Price likes to sort of surpass this Frankfurt opening price level. So what I mean by this, let's go into a bit of detail here. So this particular zone here, this valid sort of POI to be looking at, we have very, very valid liquidity underneath here for price to sort of liquidate. You may be expecting price to come into here, take out this liquidity, mitigate, get your lower time frame confirmation, blah, 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 and the price to continue buying. And, you could see yourself being a buyer in here. However, where does the Frankfurt opening price come into sort of play here? Oh. So we want to be taking trades. So for example, we want to take a buy. We want this price action to surpass the Frankfurt opening price range or the price opening level. So what I mean by this is if we're looking to buy, we want to be buying underneath the opening price. So say how this level here, this sweep of liquidity here is at the Frankfurt opening price, above the Frankfurt opening price, whereas our sort of entry or our level to play, we want it to be below the opening price and then to continue up. And obviously the same thing would happen for sells. So say this was the Frankfurt opening price. Let's just, let's just draw it out nice and clean. So we wouldn't want to be taking any sells off of levels which are below that Frankfurt opening price. We'd want price to surpass it, to go above it, and then we can sell. So in this example, the reason why I wouldn't look at this zone is because it sits on the Frankfurt opening price. However, this level is below. Hence, we could expect price to likely want to come to this level to continue up. So you could draw out a little diagram for this just to sort of make it nice and clean. So we've got I'll do. So let's say Frankfurt opening price was here. And potentially you were looking to take a buy off of the sweep of this liquidity in here. Well, this sweep of liquidity is above the Frankfurt opening price, and since we're looking to take a buy, we want to be, for more confirmation of our level, we'd want to be taking a buy from below this level. So hence, instead of looking at this level, we could mark this out as a trap. So maybe a London Open trap. So as London Open kicks off, we start pushing towards Frankfurt open price. This zone could be seen as a trap, and as a result, this level may be more high probability to us. We have liquidity here to be taken out. We have nice imbalance within this leg, which can be filled, and it's below the Frankfurt opening price. So we have nice sort of confirmation around this level. Perhaps even more confirmation is that this level took liquidity. So we sort of see this as a stronger POI. So it takes liquidity here, it's got inducement, or it's got liquidity here. We're going to touch on these things more later. Below the Frankfurt opening price, and hence this level sort of holds and delivers to the high and takes liquidity there. So yeah, so essentially, we want to be taking buys from below Frankfurt opening price and sells from above the Frankfurt opening price. So that's sort of the most important things to know about the Frankfurt. We've got multiple implications in which we can use it in our trading. I don't really have this sort of rule based. However, it's just like it all forms a part of my bias. So it's used in my analysis for liquidity and what levels are going to sort of play to provide the moves for the day. So, and obviously for Frankfurt opening price, using that as a sort of level for determining which zones are more likely to hold than others, to catch the high probability entries, and be well positioned in the market. So cool. The next sort of session we're going to be moving on to is talking about the London session. So